foreign inflows into South Africa have decreased significantly. In fact, this is the first time ever we've had 2 negative net inflows of equities into South Africa. We've had outflows effectively. It's the first time it's happened consecutively, and it's not a major train smash because it's at the margin. But what we have seen are massive inflows into our bond market. Another record, it's sitting at about 82 or 85 billion rand, and that's obviously been very supportive for our rand. Next year, I think we need to temper growth expectations. I think growth is the one ingredient that's missing globally in order to support equities as an investment asset class. And growth will come as confidence comes. Growth will come, but I do believe next year, from a growth perspective, is going to be a challenge, and a lot of this does depend on what happens with on how the politicians address the fiscal cliff in the US. So we're looking as a house anywhere between 10 and 15% earnings, and we're happy with the valuation of the Johannesburg Stock Exchange at the moment. Our earnings have grown. It's been genuine earnings. Our earnings have grown on the back of genuine growth. So we're comfortable with the valuations. It's not as if earnings have gone up and valuations have gone down and there's that risk. We're comfortable with where the valuations are on the Johannesburg Stock Exchange. I think commodities, unfortunately, have underperformed. They've been very disappointing. Now is not the time to buy. I think one can afford to be patient. I think they probably will continue to underperform going forward, and the time will come to buy them. I wouldn't say sell your commodities, but I think one can wait. And look at the financial sector. I think the financial sector, on a relative basis, is looking cheap. Again, it's amazing how the divergence in banks' earnings, particularly in South Africa, how different they are. 10 years ago, the banks sort of followed the same earnings cycle. I mean, there's huge disparity at the moment between the top 4 banks. So you need to do your homework in terms of which bank you select. But on a relative basis, they are cheap. And then the South African international players, I think, are also still relatively cheap. Your South African breweries, your Bidvest, I like Bidvest, Richmond. Those will continue. In this environment, you do need those defensive players, as I spoke about. But in a South African context, they actually are looking cheap. And then, of course, there's a construction sector. And you talk about this contrarian view. We're not a contrarian view investment house, but it's interesting to see. You heard the story around Mr. Price having a market cap as big as the combined market cap of the construction sector. Now, 7 years ago, it was the other way around. Murray and Roberts had a bigger market cap than all the retailers combined. In fact, I can extend that contrarian view around the European sector at the moment. You've got Google with a market cap bigger than the Italian, the Spanish, and the Portuguese markets combined. So either you're telling me Google is too overvalued and the European markets are correctly valued, or there has to be a re-rating. There has to be a re-rating. I think you can buy South African construction, but again, I think you need to be very specific in terms of which company you look at. You've got to look for a company that's got good management. Don't just look at the quantum of the pipeline. You've got to look at the quality of that pipeline, and see particularly which sectors that pipeline is exposed to. And Wilson Bailey is probably the one that comes to mind first.